Cricket has taught me more about business than business school or 25 years of experience.
So, in terms of slow and steady wins the race, the best strategies that you could say.
Gautam, to me, the most important part of that is having investors and having leaders who backed us to do the right thing, to be slow and steady at the get-go, to win the race over a longer term. I think me and my colleagues on the Exco were always very clear that we are here to build a great institution. We're not here to pursue a fad. We're not here to, flip VC money from one investor to another. And we lost a few tosses too, right? Because in that intermediate period, we had DMON, GST implementation, Supreme Court ruling on Aadhaar, ILFS crisis, DHFL crisis, COVID-1, COVID-2, moratorium, DLG guidelines. This is India. Things keep happening. And we acquired a business because it would have taken too long to build it organically.
Globally, debt helps to drive economic growth. India is still playing catch up. Credit gaps are significant for small businesses while household debt is relatively low. Today, we shine the spotlight on a fintech that is using technology and data science to pave the way for financial empowerment for the underserved. This is the story of an incredible startup providing credit where it's due today for an incredible India tomorrow. Hello and welcome to Crafting Bharat, where we chronicle the growth journey of startups in the Indian ecosystem that are being the change they want to see. With me is the leader of a fintech that is digitally transforming the game when it comes to lending. Please welcome Prithvi Chandrasekhar, President and CEO for Consumer Finance at InCred. Prithvi, great to have you on board.
Thanks so much, Gautam. My pleasure. Very happy to be here.
And thank you for the opportunity. Well, speaking of games, it's time to assess the pitch in life and business with Prithvi on our first segment titled Ignite. Prithvi, before we get into the rough and tumble of business, I want to take things a bit light. You're a big cricket fan. You're passionate about cricket. I used to produce a show where we used to bring cricketers and business leaders together to share strategies on common ground. So I thought I'll use that as an opportunity to start things off. Lessons that cricket teaches you about business. What would you say?
Cricket has taught me more about business than business school or 25 years of experience in terms of things I watch for in cricket that I also watch for in business management are the leadership, the innovation, and the economics. Now, leadership, look at what a difference Bazball and Ben Stokes have made to the English Test team. It's mostly the same players. Amazing change. Different approach, different mindset. What a change. And India's current riches, I thank 3 generations of leaders in Ganguly, Dhoni, and Kohli for creating the happy moments we had last month when we won the Champions Trophy and were expected to. One thing I love about cricket is it keeps changing. Whether it's Varun Chakravarti recently or going back in time, Zahir Khan bowling around the wickets and moving the ball into the slips, or Ashwin, or even Saklin Mushtaq bowling the carom ball, or Tilakaratne Dilshan's Dil Scoop, or Kevin Peterson switch hit, or even fielding, boundary riders, guys fielding the ball and tossing it to another guy who will throw to save that split second. When I was playing schoolboy cricket, none of this was there.
Just protect the ball from going to the boundary.
Yeah.
That's the mission.
And the third thing is actually economics. You've got to make money. And if we've got 3 generations of great leaders to thank for India's success in cricket, we've also got the fact that we are financially viable. to thank.
So let me take that context and bring in the business talk, because when you started things off, when InCred started things off, the volumes were low, but you used that opportunity to kind of build your algos, make it stable, make your product suite stable. And this was before the numbers substantially picked up on the back of the digital payments revolution. So I want to get your thoughts on this whole slow and steady wins the race question, because you are someone who believes in data being pure as a single source of truth, but also in being pragmatic in terms of what are we supposed to do with this data, what are supposed to be the new products or services or offering or baby approach data. So in terms of slow and steady wins the race, the best strategies that you could say.
Gautam, to me, the most important part of that is having investors and having leaders who backed us to do the right thing, to be slow and steady at the get go, to win the race over a longer term. I think me and my colleagues on the Exco were always very clear that we are here to build a great institution. We're not here to pursue a fad. We're not here to, flip VC money from one investor to another. Nothing wrong with pursuing fads and nothing wrong with the VC markets. But we were very, very clear that we were here to build a long term institution. And that clarity really served us well, especially in our younger years when we had to be patient and build a really strong foundation.
Looking at that heritage that you bring in terms of making sure you're in the right markets and then expanding, I noticed some similarities with some large players in the technology space who do that with some of their consumer products. But let me dwell a bit deeper. Let me take care of the boring numbers so that Prithvi can share his interesting insights. As per InCred Finance's Q3 results, we've seen loan book growing 43%, revenue is up 44%, NPAs are down, all great numbers, profit before tax is up 27%. Now, at a time where a lot of the growth stage fintechs have struggled, what has enabled InCred to keep posting profits continuously since its inception almost 9 years ago? What explains your track record?
We started with cricket, and I'll go back to that,
It's
which
kind of
is
like asking Rohit, how have you managed to continuously win so many games and lose so many tosses at the
tosses.
same
Yeah.
time?
And we lost a few tosses too, right? Because in that intermediate period, we had DMON, GST implementation, Supreme Court ruling on Aadhaar, ILFS crisis, DHFL crisis, COVID 1, COVID 2, moratorium, DLG guidelines. This is India. Things keep happening. What helped us stay focused and profitable through that entire period is what will help us in the future as well, which is sticking to the basics, getting them right. Uh, in cricketing terms, playing through the V, no gap between bat and pad.
No baseball.
Yes, baseball, but
When
the
the
right
time is
way.
right.
Yeah,
Do it in
pick
English
your
pitches, don't do
moment.
it in English in Indian
Pick your
pitches.
moment, right? Which in fact Ben Stokes' team also does. I think their brainless baseball days are long gone. They're now very intentional about when they go ballistic, which we will do too. But it's got to be a choice. It can't, and it's got to be a situational choice, which is how we've approached it from day one. And a little bit of the philosophy that works for us is we were always bottom line focused because we believe that profits are a very good signal that you're running a good business. We were always long term focused. We believed we were building a great institution, and great institutions are profitable in our vertical, right? So that focus on the fundamentals, get the basics right. In fact, again, at one time, Rahul Dravid, until very recently, was our brand ambassador. And he used to coach with this mantra, which is there's no such thing as knowing the basics too well.
You've always got to keep working on yourself to improve
Exactly.
yourself. But I want to take the point that you mentioned that we'll go baseball, we'll go ballistic when the time is right. So let me put that in context of where you are, because you are in 8 business verticals, and that is driven by risk and stability consideration, which you worked on. Now we have seen the benefits of that because as your business loan segment has grown, we have seen the consumption loans coming down macro. So you made the right bet. Your business loan segment is doing well. But some of your larger competitors, if I can use that, let's say Bajaj Finance, they have 40 to 50 products. So the imperative to become a financial superstore, that could say considerably shorten the entry time you give to enter into a new vertical. So how does the competition factor play a role in you going baseball into new segments, where earlier if you would have say an entry period of 12 to 18 months, you would have to considerably shorten it down to 6 months because you are competing with players who are just spreading themselves and making themselves the financial go-to option for your customer. What do you do in that?
I'll give you two answers. First, something we just did, which is, I think the news came out 1 or 2 weeks ago, which is we acquired
We
business.
just missed the breaking news, but that's okay.
Yeah. And we acquired a business because it would have taken too long to build it organically. And that is in a way baseball, right? When we started, we didn't acquire a business, we built it organically from the ground up, which is why it took time for processes and risk reads and the business economics to mature. So acquisition is one way of speeding things up. However, when do we go for growth? When we have a lot of confidence in our product economics, and confidence in our product economics mainly means confidence in risk. So until we have very solid confidence in risk, either because of the tenure of our business there, like in personal loans, meaning we've been in it from day one, we wouldn't go ballistic. That has been a very foundational belief at InCred, which is we're risk first. And this was through all of us in the leadership team, having studied companies in India and around the world. The easiest way to lose this game is to get risk wrong. It's like the easiest way to lose a test match is to be 83 all out in the first morning.
In fact, that brings me to the next point around scale and our next segment. So let's borrow some perspectives from Prithvi on scale and the AI opportunities that beckon on our next segment titled Launch. All right, Prithvi, InCred Finance, it's offering, I think, credit to more than 3.5 lakh borrowers since inception. Now, the guiding mantra for scale and expansion here on at InCred Finance, from the right operating model to, more importantly, the right tech stack as you double AUMs. In a sense, how are you becoming Rahul Dravid? You took 41 balls to hit that first run, but in this next phase where you're going to hit above 50 runs in less than 60 balls, what's the planning that you have?
From a tech design viewpoint, Gautam, the plan doesn't change. One of the very good things we've done is put in place the foundations at inception that will serve us well even when we have scaled up.
Okay.
So we don't have to wreck and rebuild any part of our architecture as we scale.
Any examples you could share which illustrate your point?
This is a tech-oriented point. From day one, we designed all of our tech in modular microservices-based architectures, right? Now, the beauty of a modular microservices-based architecture is that it easily scales. So if I have a credit bureau model, as I bring in a new vertical, I can basically port the same microservice to serve that new vertical. If I have a KYC module, again, I can port that module to serve the new vertical. Our Kubernetes containers on Amazon, they again port across verticals, across product segments, across customer life stages. And this was very costly for us to do back in 2016, 17, 18. We are now reaping the benefits of having built it the right way from the ground up. Kind of, it's a bit like play some first-class cricket before you start doing a lot of T20, right?
And the next stage, I mean, in terms of this microservices architecture that you have, The next stage, I mean, lots of possibilities open up. Let me speak on AI. Any conversation, I can't avoid that. But you have an interesting perspective. You mentioned in a LinkedIn post about the need for common sense in the context of integrating AI in business. I echo that sentiment completely, because when I look at the use cases, credit dispersal speed up, fraud detection, these are great use cases, but these have now become standard bread and butter use cases when it comes to AI. And for a fairly big NBFC in a capital hungry business, the question is, what are the possibilities which are opening up in the slope of enlightenment, as you call it, phase of AI and Gen AI, as the data ecosystem gains more traction, from tier one to tier two, tier three, tier four, because this payments revolution has opened up a lot of data avenues to truly understand your customer and build a credit profile for them. What's your take on this? The AI factor.
Let me think about AI as two different types of technology. The first is predictive AI, and the second is generative AI. Now, in my industry, predictive AI is not at all new. It goes back to the 1950s when Fair Isaac built a statistical scorecard using credit bureau data for customer risk assessment, which is still now the famous FICO score. That was not a machine learning model, it was a supervised traditional statistical model. Falcon, which was built in the 90s for credit card fraud detection by an Indian, actually, an IIT Madras graduate who owns still the patent rights on Falcon. Yeah. uh, that is one of the first commercial applications, and this goes back to the 90s, of what we would now call a machine learning model, right? I have been doing this professionally for at least 25 years, right? First with Capital One in the US, now with InCred. It's not new, it's very robust, it's tried and tested. It has limitations which are understood by professionals, which need to be managed professionally, right? For example, I won't get into more deep
What happens
examples.
to Gen AI? You mentioned predictive AI has been existing since the
For
50s.
yeah,
Then Gen AI, what does it do for you?
there are 2-3 areas where I think it will have a big impact. Where I'm already seeing it have a big impact is in programming, where in the software development space, it has been a revolution. I mean, paper I read by a prof at Princeton actually about software development. Something like 90% of active software developers in the US today are using Gen AI to write the first draft of their code. It's the first draft, you've still got to do the craftsmanship, but that is a big boost to productivity.
And they're getting more and more impressed. I think with the latest iteration, 37.5 of Claude, they are saying, oh, it's already built. It's built an app,
Yeah.
ported an app completely, which was as required, and I didn't have to do. This is a developer just sharing in a post. So absolutely.
So
echo
that's
your point.
fantastic. That's fantastic. There are big problems which are still unsolved. And let me call out two of them. One is who owns the IP. And second is how do you solve the garbage in, garbage out problem?
Okay.
Okay. Who owns the IP? These 90% of active software engineers who are using AI to write code are using somebody else's code,
That's also there.
who is not getting paid for that usage of his code. How are we going to govern this is not clear. It's a big problem. At some point, it will have to be solved.
But say it is solved, and I'm talking about the slope of enlightenment phase, which you talk about, where these issues are solved. Then what possibilities open up for you?
Generative AI, actually, a lot of possibilities open up, particularly in terms of how we interact with customers, how we offer unique or bespoke customer journeys. Ideally, even how we allow the customer to fashion their own product. Right?
Create your own finance product as you go.
I mean, this is something I experimented with in one of the best schools I've ever attended, which is Capital One, right? A Capital One Bank, right? And at one time, we launched something called Build Your Own Card for credit cards, where you as a customer were given a palette of different features, and could play with it to customize the credit card you want, which we finally killed because the lift that we got from the wow factor didn't compensate us for the cost and complexity of build your own card. Now, as the technology gets ever better, the difficulty of build your own card from a cost and complexity viewpoint keeps dropping. And so the
So have
same
we reached that point in your opinion, or there's still some
not
way to
yet,
go?
but we're not far away.
Not far away. In fact, what amazes me is the possibilities which occur. For example, even in your space, right? There are innovations like if the customer has enough, if through payments data you get to know that the customer has enough money in his or her bank account and they have a bit of a loan payment to make, the data nudge goes that you have the money, you can pay. Let me tell you why. Because if you don't right now and pay some 15-20 days later, there'll be an additional charge. Why do you want to pay that extra money? You might as well pay it right now. It's a sort of a moment capture that they do.
This is not futuristic. This we've been doing.
Okay.
Not
It's not about the futuristic. It's about how the use cases are developed.
No, this we actually do, and it's great. This is not called AI, but one of the best technologies we have going for us in India today is AA,
Okay.
account aggregator.
Okay.
Yeah. Which allows me to essentially share data with anybody in the ecosystem with explicit consent and permissioning at the click of a button and with an OTP sign off, with the ownership of the data still residing with me as a private citizen, and with access to the data being with the person who's using it without any intermediary layers. So it's actually a fantastic system. We're using it today primarily for bank statement analysis. There's no reason it can't be used for telecom data or for savings products or for ID products, right? Like kinship, home ownership, employment. We're just scratching the surface on what this, architecture can do.
Time for a look at how AWS enables InCred to do incredible things in the credit arena. Lend us your ears for a mini segment titled Boost. Prithvi, InCred started its journey with AWS in 2017. So, if you can take us through the highlights of this association, because when I look at use case, I think you're working with AWS closely to build a Gen AI powered ticket classification system that's for customer support, which helps you improve agent productivity and end user experience. Any other examples that you can cite where your goals around innovation and scale have been served by working with AWS?
Great lead, Gautam, because innovation and scale are exactly what AWS give us. We started off in 2016-17 with AWS very much to future-proof the business because we knew it could scale pretty much infinitely, that it would support our modular vision, and that it would keep getting upgraded, right? The amount of data we need to pump through our infra today is a lot more, right? AI is very data hungry. And AWS is able to keep up with that. All of that has played out well. You talked about ticketing, which is, of course, important, but almost the existential core of our business, which is digital underwriting, which outperforms the human intelligence, that sits on AWS, right? Our algos, you can call it AI, you can call it statistical, whatever, right? Our algos, our data that the algos feed off, the decisioning systems that then take the output of the algos to actual frontline decision making, the feedback loop from what happens to that decision to writing better algos, all of that sits on AWS. And when I talked about building the foundation in the right way, a big part of that was actually using the AWS platform.
Well, to rise in sport and in business, you need data on your side. And thankfully, AWS is on the side of InCred. Well, it's time to bring in the spider cam for some trend watching on building capacities to improve India's lending ecosystem on our final segment titled Orbit. All right, Prithvi. In a fireside chat, you mentioned in the current slowdown, being part of a broader realignment between winners and losers, with InCred emerging stronger due to its risk management capabilities, while credit marketplaces are likely to be challenged. You've echoed that point in the earlier part of this conversation. So, if you can just give us a bit of sort of DIY for our users out there as to what you are doing right in terms of managing asset price and asset liquidity risks, which could serve as a sort of sort of an inspiration for other possible fintech founders who are watching. Any lessons that you think it applies to the wider industry so that this space grows as India grows?
Speaking to other fintech founders who would look to support this space as India grows, what I'll underline is nothing matters more than risk management. There have been times in the past where we as an industry have overemphasized convenience, user experience, cool chatbot technology. Nothing wrong with all of that. It's great. I love to give the customer a great user experience, but a bit like, to win a test match, you need to take 20 wickets. To win in a credit business, you need to underwrite well, right? If you don't do that, you're not going to have a successful credit business. And I think the experience of the last 10 years really speaks to that, where unfortunately several very good companies with very good leaders and good product designs and fantastic user experiences have hit up against the same rocks under the surface of the sea and gone under, the rock being underwriting, right? And it's not that underwriting is some kind of magic. It just takes a lot of patience and a lot of skill and experience to get it right. It's not that the headlines about payment transactions from tier 3, tier 4 India for underwriting are untrue. They're very true. We use that data in our underwriting as well, as do many other still surviving smart companies. But saying, I've got this signal and I'm therefore ready to do 2,000 crores next month, too quick, right? And there are many people who've made this mistake. I think it's unfortunate. And I hope in the next cycle of innovation that doesn't happen.
Well, since we've got you in a professorial mode, maybe we can get some more lessons from you, especially from a funding journey perspective, right? Because that's another big issue which startup founders face. Looking at your example, InCred achieved unicorn status with its Series D funding in 2023. So when it comes to going the IPO route, there is speculation that possibly the last quarter of this year there's something happening. But that's not what I want to focus on. I want to focus on the mistakes to avoid in a typical funding journey that you would suggest to our viewers out there, saying don't make this mistake, as you already believe in patience, but when it comes to the funding journey, how does that patience translate to value?
So it's a very important question, Gautam, because we were talking about this before the show. Finding the right investors is very, very important. I think too many founders are impatient to have some money in the bank, to have some liquidity in the
A
system,
nice
and
picture
say,
in a magazine.
saying yes, congratulations on your fundraise, etc., without sufficient alignment between the founder's vision and the investor's vision. The misalignment could be in terms of timescales, it could be in terms of exit strategy, it could be in terms of product portfolio, it could be in terms of what kind of IP are you creating. Many of these things could be misaligned. And it's really worth having a very deep conversation with investors to make sure that you're trying to achieve the same thing. We were fortunate on the one hand, and on the other hand, very particular to have investors on our side who backed our vision of building a great institution which is founded on credit excellence.
Because you stuck to your guns and said, this is what we are. You can either join us
Yeah.
or you cannot be part of this journey.
Yes.
You need to
Yes,
make
and there
that
were
clear.
many storied investors and VCs who saw the space differently. Uh, and I will claim some credit for this and for our team, which is that, I mean, if our vision didn't align, we didn't go ahead with the deal, right? Which takes courage in your own conviction. And the lesson I would want to, pass on to other younger founders is
Hmm.
believe in yourself, believe in your vision, find investors who share that belief, make sure they're patient. Investors who want to pull the plug on you very quickly are dangerous. The better investors are patient. They've walked this road for a very long time. And it's like a marriage. You will shape each other inevitably as a founding team and as an investor. Uh, but before you get into it, make sure that that basic compatibility is there.
Because it's a long term phenomenon. And some of your talking points resemble, I think, pep talks that were given before the GABA test. So, before I bowl the last over in this test match of ideas and insights, let me ask you this question on broadly. What are the gaps that need to be addressed for the credit ecosystem to improve in India and, of course, to power its Mission 2047 ambitions? What should be the top priorities? And what role does InCred Finance see itself in kind of contributing to that cause? What would you say?
Thanks, Gautam. Great question. In terms of where are we today in the credit ecosystem, we're at a moment of correction and I think change in direction. So, in the last 10 years, consumption credit, which is personal loans, credit cards, and consumer durables, has increased slightly under 10x, right? But it has doubled again, and a bit more in 10 years, right? So it's well penetrated, partly because the India stack we have built facilitates that penetration. That's been made possible by Aadhaar, by credit bureaus, by account aggregator, by video KYC, by the deep penetration of mobile telephony. All of that contributes to that phenomenal success. We want to replicate that phenomenal success in the next 10 years and onwards to 2047. We will need to invest in our DPI, in our digital public infrastructure, as an industry, as a nation, to make it happen. The way we've invested continuously in another part of the ecosystem over the last not just 10 years but 25 years. Sibyl was set up 25 years ago, right? Where do we want to invest? What am I lacking now? For example, Vietnam, property records are almost entirely digital. It's not in India. So, on the one hand, as an ecosystem, as an industry, we want to pivot towards more secured. We all want to. But the infra doesn't yet support us. And, doubling down to make that infra is vital. It's not just property ownership, it's asset ownership, like financial assets, insurance, savings products, share transactions. It's vehicle ownership, kinship, right? I live in my grandfather's house. How do I demonstrate to a bank that this guy is my grandfather, right? Employment. I say I work for this studio that we're shooting in. How do I demonstrate that, right? All of this can be done digitally with a click of a button. We've got the technical imagination and the capability to facilitate that. We now need to bring it to life. How can we as InCred make that happen? We're a small player in an enormous ecosystem. We'd like to contribute thought leadership, personal leadership, partnerships in and around the ecosystem. We like to think of ourselves as a force for the good, both in our immediate vicinity and more broadly in the nation. I don't think we can shoulder such a big burden as a small company still, but we are certainly playing to make that happen, using the assets which we create responsibly, partnering other ecosystem players, whether in the private sector or in the public sector, to bring that to life. And you probably sense I'm speaking with some passion here. We've got a long way to go. We're still an underpenetrated economy in terms of credit access, even though the part where we've built the infra has covered the gap.
We've done this part.
Yeah.
We need to improve the
Correct.
outcomes part.
Correct. And to finish on cricket, you can't win a game by just having a great batting team or a great bowling team. You need both.
We've suffered for far too long when
Yeah.
we see only one side working. As you said, every side, the batting side, the bowling side, needs to play for change and, more importantly, needs to play with a winning mentality. Well, that's our cue to wrap up this match of ideas. It has been a wide ranging talk on building a champion business, as I said, that plays to win in the Premier League of India's lending space. Prithvi, it was great to speak with you. Thank you so much for joining us here on Crafting Bharat.
Thanks, Gautam. My pleasure. Really enjoyed our discussion.
Thank you so much. And thank you to our viewers for joining us. That's it from me here. Hope you have a great day.